Hi guys, Scorpions FX here, and I hope you well.
This was a 1 to 18 risk reward ratio trade, I believe, meaning you could lose 17 trades in a row, and with this one trade still be in profit. Also, if you took the scaling opportunities, you could be up about 40% from this single setup. So that's really amazing. Please subscribe to this channel.
I'm going to be doing a quick trade recap on the US30 from a fundamental perspective and a technical perspective. So I'll start on the weekly chart, and what we can see is price ascending in a corrective manner. I'm also going to show the trade on MetaTrader, so just keep that in mind. On the weekly time frame, price was ascending correctively. From a fundamental perspective, this was during the US election, so we know that there was going to be uncertainty in the US stock market, so we're looking to take this bearish in the short term. But the US economy is very strong, so it's just going to be like a retracement trade. So as you can see, we're breaking highs all along, and on the daily this was in an uptrend. Also got a strong rejection there, indicating uncertainty as well. So now this is where it gets interesting. On the 4-hour time frame, what we had was bearish movement, and we created a 4-hour order block, although this is still in an uptrend on the 4-hour time frame, so we won't mark that out. On the 1-hour time frame, we've created a downtrend. So what we had was an impulse break of structure, movement up, creating a lower high, and break of structure to the downside, showing that it's a clear downtrend. And then what we have is our institutional candle, or our order block, on the 1-hour time frame. So that is our 1-hour order block, and that's where we're looking for price to reverse and continue to the downside. What we also have is, in this area, we have imbalance there and imbalance there and imbalance in this area, which price has filled. So I'll also go to the 15-minute time frame to see what we have in that area. We also have 15-minute institutional candles in that area, and this imbalance to fill, so price was going to the upside. What we have on the 1-hour and the 15-minute time frame is this ascending pattern as well, moving correctively to the upside towards our order block, giving us more confirmation that price will break out to the downside. So I'll just take this off the chart, but as you can see, price is moving correctively to our 1-hour order block. Then what I did was I went down to the 5-minute time frame. I wasn't planning on going any lower than the 5 minutes, and waited for price to tap into a 1-hour order block, create a 5-minute order block, and then I'll be placing my entry. So price began to move correctively, tapped into our 1-hour order block. You can see the corrective nature of the move, and I was waiting for a break, indicating a change of trend on the 5-minute time frame and a 5-minute order block. As you can see, price broke the low, indicating that this is now a downtrend. And obviously, if you want to see a bigger swing on a higher time frame, price will change on the lower time frame, change trend on the lower time frame before showing the change of trend on the higher time frames. So this is an indication that price is going to move into a downtrend on all time frames. Then I placed a sell stop. I didn't place a sell stop, but I was looking for a sell at this level. I didn't place a sell stop because I couldn't place a sell stop at such a short distance from the current price on my broker. And then the target was back to the next institutional candle on the 1 hour time frame. And again, I'm going to show this on my trading account on MetaTrader 4. So then I just let this play out again. Price tapped into the 5-minute order block. And began to move down. Because this was an entry on the 5-minute time frame or for 1 hour order block, I didn't move my stop to break even immediately. I was waiting for price to at least break 15-minute time frame structure before moving my stop loss. So at this point, price is moving at about 3%, and then I'd move my stop loss to break even. Let me also just mark out the 1 hour time frame order block, so you can see as price approaches that level. Also keep in mind this ascending bearish pattern. Now here you can see this is how I'd be managing the trade. Here's a 15-minute order block where price could come to retrace to and continue to the downside. So I was watching that area for continuation to the downside, but I don't believe price tapped into there. So price failed to get to that level. We created another order block right here where price should react off of and continue down. So now you can see that we're clearly in a downtrend, making lower lows and lower highs. So I'll be marking out those lower lows and lower highs to be looking for areas to go short in the market again. So there was that one. See, price tapped into this order block perfectly. Before going to the downside, or it missed by a pip. But I remember there was another one where I got a second entry on this pair. On the 1 hour time frame, you can see price clearly tapped into that area before going down the 1 hour order block. Price there formed a new order block, might tap into there before going down. As you can see, we tapped into that area, and that's where I got my second entry and dropped again. Price formed another order block there, so if you're looking for a third entry or maybe a fourth entry, you could place your sell stops there until the trend changes and breaks to the upside, and there that's where we would have hit our take profit. What's interesting is after price taps into the 1 hour order block, as you'll see, it reverses immediately. That's the power of order blocks. We can also see that price breaks structure here, indicating that we might create an uptrend before moving to the upside, and comes back and tests this newly formed order block where price reacted off of and continues to the upside again. So you're going to see that my take profit was right there at that area and missed by about 1 pip with my broker, although I should have closed it at the top, but I placed my stop loss, my take profit, in the middle of the order block. And then price continues to the upside as strength comes into the market. So that's how I broke down the trade. That's how I looked at the market from the top down, using top-down analysis, using nature theory, using order blocks and other institutional concepts. There was also a Wyckoff distribution in this area which you could have looked at, which I didn't label, but that's how I look at the market now. I only trade 4 pairs and 1 index, and I'm going to be backtesting other things. And that's all for this trade recap.